Hi, everyone. My name is Powell Slaughter. I'm a senior editor with Furniture Today, and welcome to this edition of the Home Furnishings Education Network. Joining me today is Mike Barron of Barron and Associates. Barron Associates is a broker of factoring, trade credit insurance, and accounts receivable insurance. Does 90% of its business in the home furnishing space. Mike has formal relations with 5 of the top factors for the furniture industry. He also does a lot of work with trade credit insurers, and also has relationships with 2 of the top 3 credit card processing companies in the world. So he's joined us before to talk about financial issues as they relate to retailers. Today, Mike's going to share some thoughts on what retailers can do to get out of the gate fast once business starts resuming for brick and mortar in the wake of all this COVID-19 pandemic mess. We got a lot of retailers who are struggling just to keep the lights on, they're cash strapped, they're postponing payments on payables, and they got a lot of things that they're aging fast. And we're going to take a look at the situation and what retailers can do right now to make sure their credit is in shape to take advantage of the rebound. Mike, thanks for joining us. Can you give us a little bit of a some thoughts on what you're hearing out there from in the vendor space as far as receivables and just your overall take on the situation for brick and mortar?
Oh, thank you for having me, pal. It's always good to see you. I wish you were wearing glasses so I couldn't tell the difference between us. I think there's a few things that we probably should set up, and that is we were pretty much driving down the highway at the close of 2019, early 2020 Vegas market was when you heard the first rumblings. And what we want to try to do, or what I would like to help do today, is define and uncover an unknown entity within the credit market. So probably would like to define a few terms to start out with. And that is when a vendor goes to sell to their retailers, they have a number of ways with which to transact that business. The cleanest being cash and its first cousins, if you will. Cash before delivery, cash on delivery, 50 down, 50 back, cash on documents. These are cash adjacent terms. ACH transfer, e-check. And then as we move away from the purity of cash, we start to talk about the vendor taking house risk on time, 30, 45, 60, 90. We're now hearing 150s in some case. So we're asking now the vendor or the risk partners, which we're going to talk about in a second, to extend uncertain risk for long periods of time. Many of the vendors historically have taken a good part of this risk on themselves. So they literally create a bad debt cash reserve and hope for the best. But we've known for generations that a big way to protect that risk is the use of factors. So if you're a retailer and you're being factored, you know these names of CIT and White Oak and Wells Fargo and Rosenthal and Bibby, et cetera. The old BB&T is now Rosenthal. But there is another protection tranche that I believe 80% of the retailers are unaware of, and that is this corporate trade credit insurance.
What's that?
It's a property and casualty product that's very specialized, that allows you to transfer the risk on an accounts receivable to a carrier and generally protect 90 cents on the risk dollar in the case of willful non-payment or bankruptcy. Probably important to note that if I look at the size of credit card merchant, B2B merchant processing, and the large percentage of cash type sales that the vendor community does, and then house risk, and then factored risk, the size of the insurance tranche provided by the world's 3 biggest providers I'll start to familiarize you with some names. Euler Hermes is far and away the largest.
Mhm.
Coface is the second largest, and Atradius. And then, candidly, the other ones aren't really even germane to our conversation.
Okay.
Trade credit insurance within American furniture is as big, potentially, as factoring, at least in the top 5. So what I'm saying is I'm aware of about 300 key vendors who have insurance policies that protect 8 to 10,000 of our retailer and e-tailer vendors. Big numbers.
Yes.
And generally speaking, if you're insured or protected, you probably don't know about it. And so that I think we want to focus our conversation today on a high-minded forecast of what's going on with the risk raters, the factors. The vendors, clearly, they don't want to take as much risk today as they were taking at Thanksgiving, and the trade credit insurance providers. Clearly, in the last 5 weeks, we've started to see a large movement, pardon me, which characterizes itself as reductions in coverage or cancellations. And I would estimate right now that 15 to 25% of credit risk across factors and insurance companies has been reduced or canceled in the last 5 weeks.
And that's in the furniture space alone.
I'm speaking solely furniture and bedding. Yeah.
Oh. All right.
So the one thing we're going to try to focus on is vaguely and in broad terms, what can we do? I want to, excuse me, the vendors have not historically shared with their retailers that they're being insured.
Mm-hmm. Why is that?
You know, I don't want to turn it into a conspiracy theory. I can share with you how it was born. And that was back in the day when my grandfather was in the furniture business 70, 80 years ago. They used factors because they were not bankable. And the factors over time couldn't or chose not to take all the risk. But the vendors wanted more risk partners, and it opened the door for these trade credit insurance providers. But don't get mistaken. The biggest one, Euler Hermes, is over 130 years old. I'm aware of a couple policies here in California where they've had these policies with Euler for over 100 years. But I guess for whatever reason, they saw no need to share it. And then it kind of became this little secret. And I think it's time that we expose it so that our important retail community can take the upper hand and start to take greater ownership over their ratings.
So you feel like maybe in some cases the vendor might not have wanted to get into a situation with their customer where they're saying, "Hey, we're insuring you for this."
Yeah, I think maybe in the old days, it was born out of, if you'll forgive me, man-to-man, family-to-family relationship. Hey, pal, we've been in business for generations. You pay me in 60 days. I know you're good for it. I heard Jerry Epperson in a webinar the other day remind us that every 10 years, we lose or turn over 1/3 of the top 100. Mm-hmm. If you start to look at bad debt opportunity in a bad way of what we're looking at, we want our vendors to protect that risk, because without the insurance companies taking on that risk, prices continue to rise. So it's really good for the industry, but most people don't know. And I'll share a story. I'm working today on a case of a top 100 vendor who's over $100 million. And they know that 5 to 7 factors are factoring their key vendors. And he just lost his coverage. $20 million of credit coverage. So potentially, if they're utilizing that whole limit, which they don't, and he turns that limit 6 times a year, he's potentially lost $120 million of wholesale credit bandwidth.
Wow.
Yeah,
Yeah,
that
these are some big
it's
numbers.
potentially ruinous. And what makes it worse is just the slap, if you will, of gee, I didn't even know this was going on.
Yeah.
So I think our chat's super timely, right?
Yeah, well, thanks for that setup and, raising this other tranche, as you mentioned, of credit risk insurance. I want to kind of follow up a little bit, along these lines. We're hearing about a lot of large retailers sort of unilaterally extending their credit terms. And, there are a lot of smaller retailers out there who don't have that kind of buying juice. We're hearing about vendors, starting to demand cash on invoice, cash on delivery, that kind of thing. What's your take on that?
So yeah, some people are being very elegant about it and asking, and others are just saying. I was working on a case for a very large garment manufacturer who does business with a group of retailers who also do furniture. And he asked me, I want you to call this corporate headquarters. It's a $1 billion plus company. And I pick up the phone and it says, thank you for calling the X Corporation. Owing to the COVID-19 virus, our offices are currently closed. If you are a creditor calling about an invoice due, please note that we're adding 90 days to our invoices. Good luck during this trying time and goodbye. And that's a kind of a harsh reality. But what's going on, in my estimation, is retailers are either slow paying or not paying. But the vendors don't have that luxury over on the other side of the supply chain. The Far East factories, if we can focus on those, don't look very well upon people who are slow paying or non-paying. And our vendors are trying to keep their manufacturing slots open. So they're keeping manufacturing alive. The ones that I talk to every day are making, shipping, and currently inventorying product, hopeful that when the gate opens, that they'll have the right product and pricing in order to take care of the demand. But it's going to look like the beginning of a marathon. And if you've ever watched the New York or Boston or San Francisco marathons, LA, we have a good one here, there are 15 to 20,000 runners. And what they do is they take the elite runners and put them at the front of the pack, the professionals. And they bang a gun, and the elite runners take off minutes early so they can run ahead of everybody else so they're not mixed up with the everyday casual runners. And then the thousands of runners behind have to walk for a half an hour, for half a mile before the pack stretches out. If you don't have your credit house in order or a pile of cash, and who of us does, you're going to feel like you're at the back of the pack and you're walking when there is, in fact, a real opportunity to get out in front of the pack and run with the elites. And you don't have to be big. You just have to not hide and start to ask some tough questions.
We were talking about in a situation, say my store's been closed for weeks or months. And, any cash that I have on hand, I'm using just to keep the lights on, maybe pay some people, keep the back room ops going. If I'm behind on paying vendors and those payables will have aged even further when I'm ready to start buying again, what should I be doing right now?
We did this, a year ago in Vegas, kind of an approximation of this. And we told the folks who watched, when a rating agency, a factor, or an insurance company calls you, pick up the phone. Now I'm going to turn up the dialogue. You need to pick up the phone. You need to talk to your top vendors who you think are the early players in your new season, if you will.
Mhm.
You need to ask them in rather forceful language, are you insuring me? And if so, who are you using? And what is my current status? Unfortunately, there isn't a way to reach in to the insurance system and find out. If there were, I'd love to be the messenger of that. It's going to have to be a new, candid conversation, retailer to vendor rep, retailer to vendor management. Look, I know there's probably a 70% chance that you might be insuring me, and I would like to get out in front of that mechanism and work with you and your insurance provider, the insurer, to give you whatever you need in order to give me the appropriate rating so that I can acquire on terms what I need. If you don't, it's going to feel a little like, sorry about this analogy, like you waited to do all your Christmas shopping till Christmas Eve. And there you are at the checkout counter with all the gifts for the family, and none of your credit cards work. And so I think we have enough time to maybe get out in front of it, but I wouldn't want to wait too much longer. Also, please be aware, pal, that the vendors have been paying out cash over to the factories and have been slowed down on the cash they're collecting.
Mhm.
And you and I have talked a lot about, will the vendors have sufficient appropriate inventory?
Mhm.
So assuming that they don't have sufficient inventory, they're going to want, if they have a choice, am I going to sell to Bill for cash or Ted on credit? The vendor is probably going to lean towards the velocity and the acceleration of cash. They want to turn that cash and drive the factory and get more product over here.
Mhm.
So what we're looking to do, if we go back to our original definition of terms, is push you further up. By the way, I mean, I don't like it though. I'm a big merchant processor. You know, if you have credit card wherewithal and you're willing to help pay for the points, I think vendors are going to skew that way too, perhaps.
Okay. You know, you talked about being proactive, you know, not just answering the call, but making the call.
Gotta make the
Okay.
call.
What, you know, what if you're talking with your vendor and they say, well, quite frankly, Mike Barron Furniture, you know, your credit, you know, your insurance risk, your credit risk insurance has been canceled. You know, is
Yeah.
there,
Yeah, that's bad. That's bad news, especially now. Though we're seeing a lot of cancellations that are at the bottom of what I call the down the street limit size.
Mhm.
And the reason we're seeing that is just a trimming of their risk at the bottom of the spear, right? Everybody knows that Nebraska and RC and Havertys and Raymore are all going to be fine. But if you have been canceled at the bottom, you need to work with your vendor's credit department to push back with their insurance provider. We had an instance, we talked about this a year ago, with a pretty good sized vendor opening their second store. And the particular insurance company got erroneous and sub-quality information. And in the weeks building up to the new opening, they pulled their limit at a time where this vendor was looking to stock the second store. They
retail.
lost their limit.
Yeah.
We pushed back against it. Pardon me, I got involved and we were able, in rather quick order, to get the limit restored.
Yeah.
Do be aware of this. These insurance companies and factors right now are inundated with requests. So time is of the essence because there's a queue, if you will, to get responses.
You know, while we're on this particular part of the topic, you know, the conversations leading up that you and I had leading up to this Zoomcast. You had some anecdotal examples of companies that just did not did not respond to direct inquiries
Yeah.
from the insurer.
So the one that I was speaking of at the onset,
Mm-hmm.
with the $20 million limit, the insurance companies and the factors are constantly out there turning the soil to see what's underneath. What do your financials and what do your performance look like? And immediately, because we know that a huge number of our furniture stores are shuttered. Above those, some are brick and mortar shuttered, but they're doing online business. And then we have these online e-tailers who are crushing it. The consumer, the real estate and consumer product markets are suffering significantly. They're down 70%. Food and energy is still something we need, notwithstanding oil. You've got to get involved in the process. This particular retailer was called and asked, hey, we see online your stores aren't open, but we see there's a phone number. We want to talk to you about it. They didn't return the calls, and that doesn't help. And that was actually explained in the letter of the declination and cancellation. We tried to call you. We reached out on these dates, and you didn't return the call.
Well, for all they knew, that they're out of business.
Well,
I mean, with that kind of response.
As I think I recall, it's sort of looked like our corporate office is open, but our stores are closed.
Okay. So, yeah, sorry to interrupt. Yeah.
No. So communication is everything. And I kind of hope we can do one of these for the vendors, so we can, I know of, maybe a third or a quarter of where these policies are. And I'd love to educate the vendors. You got to go out, my clients, I'm telling you got to go out right now and tell your people you're insuring them. And I'm actually getting physically involved in making those calls, telling the at-risk retailers what they need to say, what they need to evidence, and what our story is going to be to try to rehabilitate our underwriting perception. But it can't be fixed.
Back in 08, 09, and continuing on throughout the recession, yes, really, we had just a huge wave of retailers shutting down. Yeah, I mean, with this kind of credit, with this potential threat to be able to maintain the flow of goods into and out of your store into consumers' hands, what's the existential threat here for the current credit situation for retailers?
I think I sent you a link yesterday of an article I read that characterized it as, and I'm quoting the headline of the article, the impending tsunami of retail bankruptcies.
Mm-hmm.
This is a tough time, and we've got to be aware of, obviously, trying to maintain client acquisition, and that's not my bailiwick. Mm-hmm. But you've got to keep the flow of product and product availability going, and the only way to do that is to either have credit, cash, or credit cards. You've got to be able to keep the vendor cycle working. And again, I think we've been talking about open dialogue with your vendors. If you were to reach out to one of these insurance providers like Euler Hermes, who I worked for many years, and I represent the big three, you would get no help going directly. You've got to go through your vendors, and you kind of need to tell your vendor, look, this is my lifeblood. Who do I talk to, and what's my status? And I think the vendors are coming around.
Okay.
So I think the news is good there.
What's hopefully looking toward better days for everybody. What are some solutions you see for ensuring a retailer's credit worthiness in the long term? And how do you think the retailers and their vendor partners can work together on that?
Yeah, I don't want to turn this into a granular dive on financials or a balance sheet breakdown, but you certainly need to show stable operations. You need to hopefully evidence profitability, and you absolutely must show good intent. And good intent isn't always timely payment. You could evidence good intent by untimely payment with strong communication.
Mm-hmm.
And I've worked on some cases over the years with some real bad payment streams, but industry leading communication, which leads me back to one of the things I heard in this webinar yesterday. You can't hide. And they tend, we talked about this a year ago, they tend to be a little punitive if you hide. They're really good if they notice a slow payment, they get a past due report. They're going to pick up the phone and call you and say, hey, Powell, we see that you're slow paying a couple vendors. Would you like to tell the story? Because we'd like to hear it. These 3 insurance companies insure $2.5 trillion of worldwide AR risk. I'm going to repeat that number. One of them is almost 1.5 trillion. Any one of them, including Nebraska, is a rounding error. They want to extend the credit to you. They're in the business of extending the credit to you so that they can charge premiums to your vendors. You need to communicate. They want to give it to you. They really, really do.
One of the things, you mentioned your thought about, maybe a bad payment stream, but world-class communications. Do you see any, that to me sounds like, these insurers and creditors are willing to, as long as they're in the loop on what's going on, they're willing to say, okay, let's maybe cut some slack here. Do you see any other areas where retailers can maybe look to kind of build that flexibility as they get going again, or is it basically just mainly communication?
In some of the cases with the insurance companies, some of the insurance companies are extending, if you will, forbearance.
Mm-hmm.
So I'll give you a little extra time. But I can describe to you, one of the companies, the way it works is if you are 60 days outside of agreed upon terms
Mm-hmm.
of a certain invoice level, the vendor must report you.
Wow.
Okay. And that report is taken and it sort of launches a drone as a red flag that I'm going to take a look at Barron's Furniture because I saw somebody reported him late. Did anybody else report him late? And they have hundreds of thousands of these policies worldwide, and they protect tens of millions of risks. And it's not always in furniture how you paid your vendor, or it might be you didn't pay your rent on time and your lease was insured. It might be you have a fleet of trucks and you're late on those payments. Mm-hmm. So you want to avoid that 60-day plus thing without an explanation. If you're going to be 60 late, and a lot of us are, you got to communicate and you got to call the insurance company if you can get your vendor to get you in that loop, which you need to do. That's the mission.
Mm-hmm. So it just basically keep abreast of where you are with which vendor and who you need to contact to maybe explain your situation yourself rather than have them make a snap judgment.
Yeah, I mean, the vendors are starting to become more relaxed about siloing this, I don't like to call it a secret,
Mhm.
but it's unknown. So we've got to tear down that wall. And, you know, furniture is an insider business. It's been built on generations of relationships. And now is the time for retailers to trade in those relationships by way of candor. I need to know, do you insure me? Who do you insure me with? What's my current status? How can I help?
Okay. Well, Mike, you covered a lot of ground here. There Are there any other thoughts that come to mind that maybe bubbled up to the surface while you've been talking here that you'd like to share?
No, but I never thought I'd be in a position of saying I missed the market.
Gosh, well, hopefully we'll all be getting together in
Right? I
well,
mean,
maybe 6 feet apart. Do the elbow.
what I wouldn't give to be walking 17 miles in High Point in the rain.
Oh boy, well, it is raining here, so you would be in luck.
Yeah, by the way, it's almost 90 here in LA, which is why I'm all over the water.
All right, well, you enjoy the sun out there and hope you stay safe and healthy.
It's good to see you, my friend.
Okay, we'll see you soon, I hope. Bye-bye.
All right. Thank you, pal. Bye-bye.
All right, thanks for joining us, everybody. We hope you got a lot out of this session with Mike Barron of Barron and Associates. Stay safe, stay healthy.